Hey, everybody. Wow. This is the first week of June 2020. We're about 10 weeks into the lockdown. Country's starting to reopen again, and I've got a lot to cover today. So, in an effort to try and keep it as short as possible and keep you engaged, I'm going to tell you, I'm going to be going over the bond market and interest rates and how they correlate. I'm going to be talking about what kind of help could we expect from the US government to not only support the housing market, but also the economy in general. And I'm going to talk about, lastly, what's happening in real estate, what's going on right now, and what we can expect over the next year or two. Okay, so let's get right down to it. So, for those of you who've been watching my videos, you know that this is the bond market. Each one of these candlesticks here represents a day. We all know about 2 months ago, there was just craziness going on. This is back here is when the Dow dropped 3,000 points in one day, and the Fed just started pouring money into buying bonds and treasuries to try and save the market, try to save the economy. They wanted the money to freely flow, but it was having the opposite effect. But we can see they finally got the message from the different lenders that were screaming because they were getting margin calls, and the Fed slowed down the amount of buying. And man, the difference is just massive, right? So we still right now, folks, are some of the lowest rates in history. I'm going to take a step back. Let's take a look. Let's go back 2 years. This is, November of 2018. You can see that bonds going up like this as rates going down. Man, it has just been a massive decline in interest rates. Bonds have been going up steadily. All of a sudden, this craziness here is when, COVID hit, right? But realistically speaking, we have to look at this from the perspective of what has it been like over the last 50 years? Well, folks, right now, there's a different interest rate for purchases than there is for refinances. And I'm going to tell you why that is in a minute. But either way, we are at the lowest rates in history right now. I'm going to show you some of our bank competitors because they advertise their rates online. And I'm going to explain to you why the market is working like it is right now. So there's a different rate for a purchase than there is a refinance. And there's a reason why there's a different refinance rate as opposed to a purchase rate. And the biggest reason is risk. Okay, so we all know that the government went and did a allowed forbearance, right? Where they in an effort to keep everybody calm and people don't, go into foreclosure, they came in and said, okay, you don't have to make your payment over the next 6 months if you just call your lender and tell them you want to go into forbearance. Now, we did this back when the market collapsed in 2008, but back then you had to actually prove that you were insolvent, that you weren't able to make those mortgage payments. Now, they just said, hey, if you can't make them, just call your lender. Now, what they didn't expect was that this was going to cause a massive amount of forbearance. In fact, I have clients that have called me up wanting to know about forbearance, and they're still making $200,000-$300,000 a year. Listen, forbearance is a great thing for those of you who, cannot make your mortgage payment. Nobody wants you to lose your house. The federal government especially doesn't want you to lose your house. But if you can still make your mortgage payment, you need to. Here's what's happened, though. Because so many people have, asked about forbearance or started the process at least, Fannie Mae and Freddie Mac, came back and they said, okay, well, we're going to have to fine lenders. If you guys are giving loans out to people that shouldn't be getting loans, because they're in danger of not making their payment, we're going to fine you. And we're not talking about a couple $1,000s. We're talking tens of thousands of dollars. If you buy a home or you refinance and then you don't make your first payment, the lender gets a huge fine. So what did lenders do? Well, lenders went, okay, We cannot take that risk. We have to spread the vulnerability that we're in among all of our clients. So here's what we're going to do. We're going to raise our interest rates on refinances while we keep them low on purchases. So I'm not picking on Bank of America or Wells Fargo. These just happen to be two of the banks that I'm showing you guys right now. So Bank of America, you notice it's the refinance rate because their purchase rates are different. I'm going to show you Wells in a minute here. They're saying today, which is April the 1st, 3.625%. But check this out. They're saying it'll cost you 0.548 in points to get that 3.625%. In other words, you're not really getting 3.625%. This isn't even counting your closing cost. This is just to get that rate. Let's take a look real quick at Wells Fargo. Wells Fargo, you'll know, I mean, at least they're being very transparent about it. Their purchase rates are 3.125%, and their refinance rates are 3.5%. So here's what's happened, folks. When the market went nuts back when, you saw my last video here, lenders raised their rates on refinances into the low to mid fours because they just couldn't handle all of the business that was coming in. It's called capacity. So over the course of the last couple of months, after the Fed stabilized here, lenders started lowering their interest rate. Now we're taking tips from Fannie and Freddie, for using their tips for our guidelines, right? For what will allow you to qualify for a refinance or a purchase. And right now, because forbearance is still a wide open question mark, lenders are keeping their refinance rates much higher than their purchase rates. Traditionally, it isn't that way. So what we expect to see from the federal government at some point is we expect them to come in and go, okay, forbearance is no longer going to be allowed, or at least forbearance based upon your word is no longer going to be allowed. You'll need to show that you are not able to make those mortgage payments. The day that happens, we expect that lenders across the board are going to lower their interest rates to be in more parity with the bond market. Now, what do I mean by that? I mean, folks, the way that the bond market is right now, considering this was rates, by the way, in the high fours to low fives, we're down to the mid threes on refinancing, according to Wells Fargo. Some lenders are better. I can tell you that traditionally banks sometimes will, try and own the market, but direct lenders like ourselves are at least as good on their interest rates, if not better than the banks right now. It just depends on your individual situation. What's your credit score? What's your loan to value? Are you pulling money out of your house is really, the pricing is not even close to where we want it. If you're trying to take cash out on a refi loan right now, rates are like in the high fours and mid fives. So clearly that's lenders saying, look, we just cannot take the risk that you need money and then you're not going to make your first payment. So until the federal government reverses that and allows us the lenders to look at this and go, finally, we've got some stability, we can expect that rates are going to be higher for refinances. But we feel that, at least I can tell you, the people that I've been listening to believe that we're going to start seeing a big shift in this probably in the next 2 to 4 weeks. We've already seen jumbo come back. Jumbo loans were not even available for a while. Government bond loans, people that are buying houses for little to no money down, those are no longer available, but those will start coming back. We've seen the guidelines for FHA and VA were more stringent during this really crazy time. They've started to come back down again, where they're we're able to do more VA and FHA loans. But we're looking for cues from the federal government as to, when we can start seeing some stability. So my advice to my clients is, look, just because you're not in a position to lock right this minute, just be patient. Because I can tell you, Shane and I are watching this thing like a hawk every day. We've got a spreadsheet of every one of our clients, what their interest rate is and what rate they need in order to make this a profitable deal for them. So we're going to watch it for you. So I'm going to wrap this up by talking about the real estate market. So the real estate market right now is on fire, you guys. Who would have thought? This is an article from CNBC not that long ago, a couple of days ago. Mortgage or home purchase mortgage applications are up 9%, not from last month, from a year ago. So during a pandemic, we have more applications for buying a home than we did last year. Now, there's a lot of theories as to why this is, but I can tell you that a huge majority of them believe that the reason why this is because home is more important to people than ever right now. You think about it. Home represents where you're going to raise your family. Home represents, where a good portion of your retirement might be. But home today also means maybe this is where you're working. Home represents safety and security. This is the one place you can get away from the general public and you can be safe. So we see companies like Twitter is telling their employees you never have to come back again. Facebook, Google told your employees, if you want to come back, you can. We are not going to make you come back. There is a really good chance, folks, that we're going to see life as we know it completely transform. If you have the same plans that you had 4 or 5 months ago, you really need to do some soul searching because things are not going to be the same again. Technology is advancing where we have 5G technology that's getting rolled out in this country that is going to completely revolutionize industry and the technology sector. It is going to be internet speed so fast and so cheap that you'll be able to jump into a meeting using a VR headset and you'll feel like you're actually in the meeting. Now, why is that important? It's important because there's a lot of people that have been priced out of the market that you're going to see start moving into areas that are less populated. There's a lot, we see it already. Millennials that, they can't afford an $800,000 house. Sorry for that. The millennials can't afford an $800,000 house. So they might be moving to Temecula for a beautiful $500,000 house, knowing they only have to drive into work maybe one day a week. This is setting a new paradigm in the real estate market. There is plenty of inventory if you start thinking about that particular focused area that is close to where all the jobs are, right? So listen, here's my philosophy, and I always tell this to my clients. They always say to me, is right now a great time to buy? Well, we have rates at the lowest rates in history, folks. If you're speculating, you're buying property to try and make money off it or flip it, I would say to you, now is not the right time to buy because you probably don't know what you're doing. You need to be a really well-trained investor to do stuff like that. But if you're renting and you don't own a home yet, like I said, some of the lowest rates in history right now. My suggestion to you is give us a call. Let's talk about your entire financial future. Let's talk about the plans that you have. Let's see whether or not you're thinking in terms of the new normal or whether you're looking at the plans that you had last year. And let's talk about what we can do to add to your situation and hopefully, make you a better homeowner or maybe better prepared to buy, whether it's next month or a year from now. So folks, let's stay positive. Let's stay empathetic. There's a lot of craziness going on out there right now. And I feel badly for anybody that is so frustrated that, they can't feed their family or pay their bills. We have to stay empathetic and we have to stay optimistic about the future because there is a tremendous amount of opportunity here. once we get over this nonsense, technology is advancing so fast. It's creating exponential growth. So are you going to be able to take advantage of that? That's the big question. Okay. I hope everybody's safe, and hopefully we'll talk soon. Take care.